Hyundai Motor India is one of the most awaited and largest IPOs in India. After 2 decades, it's coming up with a mega IPO. The issue opens on October 15th with an issue size of Rs 27,800 crores and price band set at Rs 1865 to 1960 per share. Via offer for sale, the company is offering 14.22 crore shares, which means all the net proceeds from the IPO will directly go to the selling shareholders. That is the South Korean parent company Hyundai Motor Company. Indicative market cap of Hyundai would be about Rs 1.6 lakh crores at the higher price band. Watch the video till the end for our rating on the IPO. About the company. Hyundai is the second largest OEM in India, set to make its first stock market debut outside South Korea. Hyundai Motor India is a wholly owned subsidiary of Hyundai Motor Company, and HMC is the third largest auto OEM player in the world based on passenger vehicle sales as of current year 2023. Currently, Hyundai has a portfolio of 13 models across multiple segments such as hatchbacks, sedans and SUVs. It has 2 operational manufacturing plants in Tamil Nadu and 1 upcoming in Maharashtra, which has been acquired from General Motors India in December 2023 and which is currently under redevelopment and is expected to be operational in phases, with the first phase to be operational by the second half of fiscal 2026. Key strengths. Hyundai is the second largest auto OEM player in the Indian passenger vehicles market since fiscal 2009 in terms of domestic sales volumes and currently holds about 15% market share year to date. Hyundai has a strong parentage and is a part of Hyundai Motor Group. It has direct support of HMC in overall operations and continues to benefit from HMC's centralized R&D centers, which helps the company to introduce new PVs, technologies and features in India in a short time to market. Hyundai pays 3.5% royalty of its sales per annum to its parent company. Company has a diversified product portfolio with 13 PVs across segments. Predominantly, the company is present in the ICE segment and now focusing to increase its presence in CNG as well as seeking to become a significant player in the EV segment. Consequently, the SUV product lineup has also been expanded in the last few years. Its SUV share stood at about 54%, which is ahead of the industry at about 50% as of FY24. Financials. Over the years, the company has reported strong growth, whereas sales volume increased by 13% CAGR over FY22 to 24. Revenue has increased by 21% CAGR over FY22 to 24, while EBITDA margins have risen to 13% as on 9 months FY24 from 10% in FY21. Peer comparison. In terms of volumes, Hyundai has 1/3 of Maruti's volumes but higher volumes than Tata Motors and M&M. Hyundai and Maruti have similar EBITDA margins mainly due to their product mix. 3-year average return ratios of Hyundai is better than the industry. Overall, it's well placed amongst its peers. Risk. Hyundai globally operates in 2 companies, that is Kia Motors and Hyundai. Hyundai India doesn't own Kia Motors. The 2 group companies, Kia Corporation and Kia India Private Limited, operate in a similar line of business, which may lead to conflicts of interest, potentially impacting Hyundai's business in India. Hyundai's hybrid plus ICE plus EV powertrain mix is about 11%. If we look at the closest peers like Maruti and Tata, it is about 30%. Going ahead, Hyundai remains committed to India and has plans to invest about Rs 32,000 crores in the next 10 years. It will aim to increase the level of localization going forward. Will it receive the market cheer? Let's wait until October 15th.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.